What's going on, everybody? Let's go. AMC, we are now in profits, my friends. Congratulations, you're profitable. Let's go, let's go, let's go. Hopefully, we still have another good couple big weeks here. Like I said, we're at profitability. Our numbers looking, I said it'd be about 2.755 to 2.8. It's looking like it's going to be about 2.715 around there, 2.7. Still think we can break 2.7. Still break that last high we had last year since the pandemic. We're feeling good, though, boys and girls. We're feeling good here. I'm just going to let some people jump in. How's everyone doing today? No, we're not going to talk about Diddy, man. Crazy. We got another Jeffrey Epstein situation. What is going on in this world? But no, we're not going to talk about that. Another time. I'm sure everybody's talked about Diddy all day. I don't need to hear more about what he's been doing. But, right at this number again, guys, 2.433. We are now profitable. Guys, at this point, go see a movie. Every penny now goes towards profit. Every penny goes towards debt, goes towards AMC's reserves. Go see a movie. This is the time, my friends. But again, we are profitable here. We're feeling really, really good. One of the things I do want to talk about here for AMC quick is, I want people to understand about what happened before this with the strike, with the turnaround with the company as well. Last year we had 2 profitable quarters. Then the strike came in. All that content was lost. Told you guys those quarters were gonna suck ass. They did suck ass, and that's the thing. If we never had this strike, a lot of these movies would have been moved up. You would have never had any of this problem. And that's the thing with our company. You could have had multiple profitable quarters, and that's what we're getting to now. We should have a profitable quarter next quarter. I believe if that strike never came, we should have had 3 to 4 profitable quarters in a row. And that's what we need to start seeing. Getting into 2025, like they said, everybody in the industry, that should be a profitable quarter or year for everybody. Let's go. So what we want to hear. One of the movies that, I kind of looked into a little bit is that Zootopia movie, that number 2. That does not get talked about enough. That did $350 million domestic last time. It was $1 billion movie. They moved Wicked up because of that. So like I said, guys, it's gonna be. Maybe it wasn't Wicked. Let me look here. It was that was a movie. 1 second here. But that's another movie in 2025 that I haven't been looking at all. But that movie's going to kill it. Wicked Part 2. They moved that up a week now because they want Zootopia to have its own weekend. They think that movie's going to crush it. Wicked Part 2 is going to crush it. Like I said, 2025 should be good. A very profitable quarter. 2026, that's where we're getting into. A lot of people because a lot of people say the same thing. Well, GameStop was profitable and they have money and it didn't cause a squeeze. Yes, but there's a difference. GameStop's core business is not profitable. GameStop's core business lost $300 million in revenue. So what the market's looking at is, all right, you don't have a profitable business. Yes, you have money in the reserve, and that's why your stock's holding its value. You have retail backing it up. It's going to hold its value. I did jump back in because, again, long term, I believe that Ryan's going to figure something out here. But currently, the plan looks like, all right, so your plan is as any time it runs, you're going to dilute to, again, I believe that he might have, the reason he diluted last time was he might have a bigger offset or operating loss this next upcoming quarter. Because one of the problems is during these recessions, hard times, one of the things that does take hits is video games. Nobody can go out and buy these consoles. They're expensive. Some of these games, 50, 60, 70 bucks. You understand it. So that's what I'm saying. I'm not here to bag on that, but that's the difference between it's like, all right, why isn't it squeezing? Why isn't it doing that? Because the core company isn't profitable. The current business model is to dilute enough to offset and keep gaining until you figure out the direction. So until that direction's figured out, maybe when he figures it out, we'll pop off. And that's what I'm hoping. That's why I jumped in at 1950. I'm hoping at that point we're feeling pretty good. So again, I didn't expect to squeeze right away, and that is what I say to everybody who talks about GameStop, why it's not. The core business still needs to be profitable. AMC, we need to keep pounding down debt, keep seeing profits, and that's what we're going to do. He'll keep cutting down operating losses like he's been, expanding revenue. So again, I'm feeling good on this company. I'm feeling good on our play. But one of the things I wanted to get into next, because this is all happening tomorrow, and this is going to determine a lot of things. If you're taking a risky play, you could bet on I don't want to tell you which way to bet, but let me explain some things here. But there's a SPY play that you could potentially take that could be profitable if you look at history, and if history likes to repeat itself, make a good play here. But like I said, like everything, it's always a risk. But let's talk about the rate cuts. A lot of people want to know, what are they going to do to the market? What are they going to do to the play? What would they do to the economy? Is it going to help? Do they need to do 50, 75, 25? What are they going to do? Well, the problem is the situation right now is so bad. This is Powell. He's really stuck between a rock and a hard place. And the answer is going to be whatever is going to help as many banks as he can possibly help. I don't believe we're going to have a rate cut. I still don't. I still think he's going to come out. He said, oh man, all this is under control. But as we'll get into, everything's lied. They've lied about every single thing. Every incoming data they've shown you has been lied about. Overestimated, revised. It's all lies. It's literally all lies. Just like the 880,000 jobs that were created that were never there. It's always lies. Matthew, thank you. I appreciate that. Go right to Little Bigums, my friend. But it's always lies. And that's the thing. It's like rate cuts can be good depending on why they're cut. If they're cut for people looking at it, other countries looking over it going, hey, this is cutting because it's a strong economy, because inflation's under control. It's cut for the right reasons. That's when you see your stock market jump. You look at history and look at the times that it fell, and look at the times that it actually jumped because of these rate cuts. Now, currently, we're not doing it because the country, everything's strong. We're doing it because, one, they would be doing it literally to save face, because it's not going to solve any problems. And matter of fact, if they do a 20 to 50 point rate cut, it's just going to hurt everybody. It's going to hurt the entire economy way, way, way worse. It's going to hurt banks. Now, here's the thing. A lot of people are like, well, maybe these banks, the banks get hurt from rate cuts. They don't make as much on their loans. They get lower rates on their loans. They get lower rates when they, in the back end with these derivatives. They get lower rates everywhere. They take in less. Now, a lot of people be like, yeah, but at that point they might give out more. Well, not necessarily, because if they're going to make more, it all depends again. Now, does it outweigh does it outweigh everything? They're going to look at who's taking out the loans, and they're going to look at retail. Taking out loans is way more riskier than these companies, these other institutions. So what it will do if they lower it 20, 25 points, maybe help a couple, hedge funds that are smaller to medium, all these lower people that are kind of over leveraged. They might give them a little more wiggle room, might give them a couple more loans to, fix some things. A lot of people are going to want to try to, renegotiate things. But here's the problem. I've already showed you. They need to lower it like 2.5. The way that the economy is working and the way that retail is and their savings, how much they're making with inflation, the cost of life, everything. Let me show you this chart here real quick before I keep going here. I'm just going to post it up. I'm not going to break it all down. But if you look at this chart here, Wales posted this the other day. So the American dream now costs $3.4 million. That's what this is coming into, and this is the problem. This is posted from Investopedia. Now, this is the problem because these guys sit there and talk about nothing, none. The deficit doesn't matter. It's not a big deal. GDP can handle this. It can handle that. And then we show you, matter of fact, no, you can't. Then they show you the Federal Reserve's everyone's underwater. One of the things that went a little bit unnoticed, and one of the things, like I said, I've been talking to you guys for 3 years. Gold. Like, gold was the place to be in unless you wanted to, for a long-term investment. I was like, this is where a safe haven to put your money. It will only increase over time. It's going to make more than what you're going to make in a bank by a long shot. And if you look at the price of gold from that point, it's been 5 years, so we're talking about that in like March. I mean, you're looking over here and it's like, you're at $2,600 right now. The price of gold tells a tale. And look at this tale. Look at this tale it tells. The price of gold has been rising, slowly rising, steadily over the years, holding value, rising, holding value. But also, look in the last couple of years. Look at this drastic spike. This is not a small spike. This is a drastic spike. And it's a drastic, steady, long, sustainable spike. And it's continuously rising. And it's going to. And this is one of the things that I've been saying. Watch what they're doing, not what they're saying. Because of course they lie. Everything's revised. All they do is fucking lie. That's what they do. They lie to you so you guys don't understand. They're not your friend. They're not your buddy. No matter what's going to happen. I don't think they'll be a rate. That could be a play, buddy. We'll get into that in a second here. Rate cut, then crashed. That is super potential. That is what history says. That is going to happen because we'll keep getting into this. So right now, central banks are buying gold at record levels. Still, Bitcoin outperforms, and that's the thing. This is one of the things I told you about. If you've been watching my channel forever, long place I get into land. If you watch land over the time period that I've told you, land was a super steady investment. Get into gold, super steady, slow, healthy investment over the long term. It outperformed any bank you've had, any CDO, money market fund. It outperformed them all. Has it outperformed Bitcoin? Because that's the number one thing all the crypto guys come in. Well, didn't outperform this, and I'm like, you're right, and that's why I say to people, if you're gonna do this, a smart way is to get your assets in gold, a long-term type thing, and if you're going to play crypto, play the run-ups. Get it on the downs, play it on the ups, because that's what it's going to do. It's going to keep swinging up, down, up, down. Look for news when it comes to crypto. Look for news with ETFs, like we went over last time with the Coinbase trade. Who's going to host all those ETFs? Who's going to hold all the Bitcoin or all the Ethereum ETFs? Who's going to hold it all? Because they're going to get a ton of assets on their books. And guess what? Their stock's going to jump. It might take a week or two, but it's going to fucking skyrocket because they're going to start raking in profits. That's exactly what happened. So with crypto's a safe bet, but it's something where it's like short term to me, where it's like, all right, I'm going to play this, ride them up. And you can definitely outperform. But here's the thing. When you look over here and you see central banks are buying gold at an all-time record again, and they keep setting a record at how much they're buying. They're buying it quicker, harder, and it's steady, and it keeps going. Because what's happening? All of these fiat currencies are fucking trash. They're all a scam. Everyone's country's waking up to what's going on. America's still just the last to act on it. We're still the last to do anything. We're the one. You don't see us rioting. You don't like the farmer. Everyone else, all these other countries got people rioting, going crazy. We're still the last to act. Sorry. All right. But these guys, they know that they can keep destroying everything, and as long as they're going to keep pushing the envelope, keep pushing things. And the second they overtook the regulators, the second they kicked that dude out of the FDIC, the second they lowered the fucking capital reserve requirements, like, dude, there's no saving the dollar at this point. There's not. It's just going to keep dropping. There's no reason. And to prove my point, to show you the dollar index, price index compared to gold, if you look at the price index today, it's at an all-time high separation, meaning the value of the dollar is at an all-time low compared to the value of gold. That's not a good thing. That's a very bad sign. Again, Fiat currencies are a fucking scam. They're an insane scam. And everybody's figuring it out. And the second more and more people figure this out, all of our forefathers warned us about this. They literally warned us about this the second it was created. They're going to take this country down faster than any fucking standing army, and they're going to destroy everybody with it. And that's exactly what's happening. Now, when you go back over here to these rate cuts, and here's the other point. Here's my point to them lying about everything. U.S. August budget deficit at $380 billion, when they were estimated at being at negative $292 fucking billion, just $90 billion off, $90 billion over. So they sit there and they do their data off all this estimated shit. When the real numbers prove them wrong, they don't seem to update those numbers. They just revise them in other data sets, but not the main ones that they give out to the public. So again, when it comes to these rate cuts, if you look at history, and that's what I'm saying, there could be, if you're listening, you could definitely make a play right now. SPY usually jumps to an all-time high. Everybody does the anticipation. Maybe it helps, maybe it doesn't. Well, again, if you look at the reasoning behind the rate cuts, everyone's going to look at this is like a recessionary period. If you look at rate cuts right before recessionary periods and throughout the history of the United States, it goes up a little bit, and then a crash. And then everybody jumps back in and everybody buys up those assets and it goes right back up. So, again, there's another thing that could be happening. So, if you can get some dry powder on hand, it might be a very convenient time to be doing that very soon. Again, a SPY play, of course there's a risk, but this is what history says. History throughout other countries are going to look at as a weakened stance. Because again, here's the thing. If you have lower rates and you have a harsh economy and those lower rates don't offset enough to fix it with that economy, it's not going to help the stock market. That's going to get priced in. It's not going to help anything. And then you're just damaging your country again. And this is my point. It's all about what happens with the banks. Because again, you're hurting the banks short term. On top of that, they're going to start realizing a lot of these losses. Because they are taking out a lot of these out. They're going to have to renegotiate. And one of the things that a lot of people need to understand is if they do lower rates, again, while Japan raises, which they said they're about to do, you are going to fuck up that yen carry trade. It's not even going to be... They're going to lose billions and billions of dollars just on the yen carry trade. Because again, remember how the yen carry trade works? You go over and you borrow a whole bunch of yen to as close as 0% as you possibly can get. Then you go over and you take that money and invest into American assets at those higher rates. And you take in the free money and cash in the money in between. And you pay your little, your yen, and then you pocket all the rest. It's literally free money for these guys. But if these blow up, they have a lot of leverage inside of these trades, as you saw before. It crashed, and that's what I told everybody. See, here's my point, and I want you guys to look at this, because you have... Here, I want you guys... This is why I say a SPY crash play could be very beneficial. Let me show you something, because there's a whole bunch brewing to this point where... Alright, watch. Hold on. Pull this up here. Alright. So... Let's say they lower interest rates. You can definitely have the yen carry trade blow up. Because again, you're coming over here, you're borrowing yen at 0% to 1% to, as low as you can, 2%, whatever they raised the rates to. I can't remember, they just raised them to. It was like 2.5% they raised it to. And then what you're doing, so you're borrowing this over here at 2.5%. You're coming over here, you're investing that in US at 6%. You're paying the fee over here and you're pocketing the rest, and it's just free money. These banks love it. Well, again, if you go ahead and this goes up, and all of a sudden you're making 5%, and this goes up to 4%, a lot of people count on that extra money and now are over leveraged in that position. And as you saw, the SPY dropped. Okay, so the SPY dropped for the yen carry trade last time this happened. On top of that, if you look at history, when rate cuts happened, because of a recessionary period or scare of a recession, or to try to prevent a recession, throughout history, it is shown you have a little run up, which guess what? We're seeing that now. And then you see a slam down. Okay, so you have one thing, two things. We're going to get into the third thing here in a second. But there's definitely potential for a pretty big SPY drop here. Now, hold on. Let me go back over here quick. So, if the yen carry, so if they drop it by 75%, this yen carry trade, like I said, and now they're going to be making so much less over here, it's stupid. You might literally make some people blow up right then and there. Again. Billions will be lost. They'll make less on loans, so it's like, again, I don't... And on top of that, the people that will really... It's not going to help the housing market at all. It won't. You're not going to drop it enough. You're not going to drop it enough to keep up with inflation. You're not going to drop it enough because you've drained retail so bad, you're not going to be able to drop it enough to where they're going to still be able to get houses. I've already shown you the metrics. I've shown you the data, and I've showed you the numbers. You need to drop it by 2.5% before retail can buy houses again. There are that many people. It was 75% of homes that were under 4.5%. So 3/4 the market is already under 4.5%. You need a big fucking drop before any of these people are, all right, maybe I'll do it. On top of that, like I said, they need to go, like I said, the housing market's got a lot of problems. And then if you go ahead and do that here on top of that, if you go ahead and start dropping rates, and now you're going to have demand, but you already don't have enough creation, the price is going to skyrocket again to offset the rates. So now, like I said, it's not going to help retail. What it will do is give funds access. So by lowering rates, you're not helping the right people. Once again, that's what's fucked up. Inflation is so high because lowering the rates isn't shutting off the money printer. It's still printing in the background. Our debt is going up like you've never seen before. And that's why gold is rising. That's why Bitcoin was, all of these cryptos were great investments. Getting away from the dollar because it's losing its value by the second. If you don't ask me, look at it. Just set a record right here. Just set a record. Dollar has its all-time low value versus the price of gold. It just hit it today. Dollar index versus gold price. You have your biggest gap now. On top of that, interest payments on the national debt for the first time in U.S. history. Just the interest on that debt passed $1 trillion. And I told you by the end of next year, when it starts again, we'll be at 1.5 trillion just on the debt. Just on interest payments on the debt. 1.5 trillion U.S. taxes are going to paying off the debt that keeps rising. Now, other countries, this is why when people are like, well, why are the other countries going to look at this and not be like, all right, this won't help? Because here's the problem. If you lower rates, your bonds, your treasuries, everything, the demand for your bonds are already lowering. That might start to cause financial strain. Other places are going to see that. You see what I'm saying? All of these loans, all of these unrealized losses are going to start to get realized. They've held these way too long. The problem is they raise rates way too fast and they're going to lower them way too slow. The economy is going to get worse through the lowering. It's not going to be. The pace won't ever catch up. Is the problem. And on top of that, they're lying about inflation numbers. They're lying about job numbers. They're lying about GDP numbers. I showed you GDI, and GDP's gap is growing. What that means is either the GDI number is incorrect or the GDP number is incorrect. And there's a discrepancy between the reporting between the two systems, the two companies. And it's growing larger and larger. Why is that? Why is it growing larger and larger? Which one is lying? Whose number is incorrect? So again, they're lying about GDP. The amount of money that are going towards this. People are going to, you have to fucking raise rates. People are going to, the demand for your treasury bonds, you have Japan selling. You have 7.6 trillion coming up. Who is going to start to buy this when they see the risk is growing and growing and growing? And that's the problem. When the risk keeps growing, they need to keep selling these bonds. They need to keep funding this. They need to keep funding this mess. And that's what it's truly about. And if the demand is not going to be there for a rate lowering of rate from all this other back end stuff, if it's going to blow up the too many banks on this yen carry trade, they're not going to do it. He's going to keep coming out and saying, well, inflation's right there, but if we do a rate cut here, we have fears of inflation rapidly coming out of control, and what we're afraid of is all that giant rate cut over such a long period of time. A lot of the work will be undone if we do it right now. That's what he's going to say. That's exactly what he's going to say. And then when he says it, I'm gonna be like, see, it's like the same script every fucking time. The last 11 times, they're 100% anticipating a rate cut. And they're like, yeah, we would love to do a rate cut one day. And then the very next day, nothing supports it. He said he's wanted to do a rate cut the last 10 fucking times. And all of a sudden people want to blow it up like this time. It's the one. Can I start over? Nah, man, but you can rewatch it. But this is my point. A rate cut, if you're paying attention right now, a SPY downward play could be beneficial to you, potentially. Because again, when we get into our third step here, there's a third step that's telling the tale of a SPY decline. Now, I'm gonna release those, TA videos. I'm gonna release some trading strategies here in a couple days. But one of the things that you can do to trade, one of the strategies I'm going to show you is event trading. You can always look at events going on, and events always have reflections in the stock market. As we went over, perfect example, the Bitcoin ETF, Coinbase popping. The only reason you went in and bought the stock, like we said to do at the time, was because they were going to house all of the Bitcoin. Of course, they were going to fucking skyrocket. So you can always do plays like that. On top of that, I've shown you guys SPY plays, shown you because of the economy, this is what's going to happen. And every time we've been right. And that's the thing. The SPY plays, when Powell talks, when you know what the fuck he's going to say, you can play it. So again, I believe there'll be another reason why there's going to be a down play on the SPY. Is if you look over here, we'll get back on all this other stuff here in a second. Nvidia is about to have a lot of problems. There's something going on that not enough people are paying attention to or talking about. Now, one of the things with Nvidia is you start to watch who's selling it and why. When Ken Griffin dumps 80% of his stake in your company, get ready. When Ken Griffin no longer has dumps 80% of his stake in your company, get ready. On top of that, if you look over at the CEO, look at this man. Look at this man. He can't even sell fast enough. I don't know if he's allowed to at this point. Look at this man. On 8/30, he sold 240 shares. 240,000 shares, sorry. 5 days later, he sells 240,000 shares. 2 days later, he sells 240,000 shares. 4 days after that, he sells 240,000 shares. 2 days after that, he sells 240,000 shares. And he's going to keep doing it. And what he's doing is he's maximizing profits because he's sitting there doing it in fucking block trades like this. But he's waiting enough periods in between the 2, the 4, the 5 for them to fucking recover from him selling. So it's like, what the fuck? So he's dumping as fast as possible. Okay? So when you have... That's 2 massive red flags. I told you eventually this bomb's going to come. You have the Doge looking at him. They said the Doge wasn't looking at him. They came out and lied to the public. Oh, we don't know anything about it. And then we showed everybody, yeah, they're actually being investigated by the Doge. One of the things I've been talking about with these fucking scam artists in Nvidia, because everybody needs Nvidia to hold up the market, one of their problems is their third biggest client is Super Macro Computer, and that's why they've just flown the fuck up. The price has just flown up, and now they're being investigated. They're being investigated right now. Just like their other big client, CoreWeave. Nvidia is being investigated. Their biggest client is being investigated in CoreWeave. SMCI is being investigated, and that's their third biggest client. Microsoft is being investigated, and that's their fucking second biggest client. All 4 are being investigated right now for fucking Ponzi's. What did I just do? Hold on. I think I just... Amateur hour. My bad, y'all. So they're all being investigated for fucking Ponzi schemes. Okay. Well, here's the thing. While SCMI is being investigated, and if you haven't noticed and looked at their stock, it's just plummeted like fucking mad over the last couple months. They were supposed to file their 10K 15 days ago, and they didn't fucking file it. And then they got an extension today, and they didn't file it. And now they're getting fined and they don't care. They're going to keep taking a fine because they know whatever they report on this fucking 10K, the Doge is going to look at, and they're looking at their software and their shit right now. So they're just delaying it as long as they possibly can. So now Nvidia is going to have a whole bunch of problems when their number fucking 3 client suddenly is getting in a ton of trouble. Because it's a Ponzi scheme. What did that guys tell you? They keep on giving these guys all of these fucking chips. Okay? And then it's, goddammit. I'm tired. I'm trying to think. It's accounts receivable. Accounts receivable. Or sales receivable. Whatever. Sales receivable. They give these guys all of these chips and say that they owe them $800,000. Or $800 million. They put it in accounts receivable, which means we gave the clients the product, but they didn't pay us yet. On Nvidia's last report, on their last earnings, on their last filing date, I showed you guys, biggest earnings yet ever. Their accounts receivable jumped up by 33%. Which means it's all lies. Which means they made more shell companies to fucking beat earnings again, so this man could keep selling at the top. They could keep waiting and holding the banks up. This is what this guy's reward was. They picked fucking Nvidia. They blew up AI, which is going to be a fucking joke. Nvidia is going to get competition. He's going to keep selling as much as they can. In the meantime, it's propped it up the market by having that market cap. It's propped it up the entire market. It's propped it up the fucking SPY. It's held them together. It's done everybody a favor in the back end. All these rich fuckers. All these hedge funds had to jump in. All the banks had to jump in. He's their savior right now. So they fucking love this guy. And in the meantime, he's cashing out. He's going to keep cashing out. And the second they find, all right, either we can't hold this together anymore, which is what I told you. They're all on the same hill. Eventually, they're going to say, all right, we can't hold this together anymore. We're going to have to go after, we're the sharks. We're just going to fucking have to eat up the little guys. Just like they're doing with the capital requirements. They're changing it for everybody but the big guys. It's a fucking scam. Once again, all the people that are the criminals causing the problems no longer have to follow the rules. And the endgame rules are now a scam. The endgame rules for bank reserves are a fucking scam. It's a complete joke. It just now allows the big banks to absorb these little banks that they're now going to put restrictions on that the big banks won't have, but now they'll be allowed to absorb these guys. Okay, good job. Really good job. But once again, you now have Nvidia about to face problems. So when we go back over here, you now have Nvidia, which is fucking propping it up. Nvidia is going to have some problems coming up. He's going to keep selling. They're going to keep having bad news. It'll go down. Revenue will go up one more time, maybe a time after that, and then it's going to start to fall. So Nvidia is going to start to go down. So the thing propping up the SPY will start to drop. The yen carry trade could definitely happen if they drop rates. Again, this is what history says every time you're dropping rates to prevent a recession or in recessionary times and you have a weak economy, it actually drops the market and then comes back up. So again, remember that. So if it does drop and you're playing the SPY and it does hit, remember, it will jump back up. If it drops, there's more than one way to play it. You know it will. History says it will bomb down for a bit, and then we'll jump back up. You know what good stocks are involved in that. Also, maybe go along on those. You see, there's plenty of ways to play. If the SPY drops, don't just stop there. If you know it's going to go back up, you know what to do. Like I said, I can't give financial advice, but you know what to do. We're learning too, my friends. Let's see. Let me look into the chat here for a second. I need a gold play. Gold will still keep rising, my friend. Gold is just like, instead of putting this in the bank, that's just your better safe haven at that point. It'll just keep gradually rising the percent. But like I said, if you want quick results, going long on gold, getting gold is not, there are ways to play gold in the market going long that you could still do. But having money again in the bank instead of having, again, like we went over physical gold. We've been talking about physical gold forever. Let's see here. But again, so when you look at the rate drops, like I said, if it doesn't help these banks, it's not going to help retail enough. All you're doing is making the bad guys get even more over leveraged while hurting smaller banks and hurting other banks. So what it does is, the thing is you have to look at these banks. And if the other thing, what they'll do is, if they drop rates, and this is what people don't understand. If you drop rates on these loans, you need to drop rates on your deposits. Because if they're not making enough on the loans and they're still paying high interest rates on their deposits, they're going to be losing money. So what that means is they're going to now need to pay you guys less. We got to give you less interest to bank with us. So when they lower rates, it hurts people that aren't getting loans. It helps a small amount of people because, again, 75% of homes are under 4.5%. You're not there, and by the time you get there, you've caused inflation by lowering rates and creating more demand. And now on top of that, the demand for the house, the price for houses is already too high. You're going to cause inflation by lowering rates, and on top of that, you're going to cause a slight raise in demand when there's already not enough inventory. Prices of houses will either stay put or they were going to rise again, offsetting the small amount that you're going to drop the rates. That's what I'm saying. They're literally shot themselves in the foot. The fiat currency is just going to get less valuable every year. That's what it's going to do from this point forward. Let's see here. What we thinking on Odin debt? And I'm going to use his latest 100 million shares to take that out. I mean, he's gonna work on his highest debt. That's all he's gonna keep doing. The highest debt, and then he's going to try and refinance that at a lower rate, like he did with the last debt. He got it at a lower rate. Yeah, he did exchangeable notes with that, but it's not the worst thing. If you get those exchangeable notes, he wipes out like a $500 million debt, and they'll do 414 million worth. So he gets an extra 92 million. So everybody that's saying, well, they need to sell it, 566 is their break even point, but you also need to add on the extra amount of the loan that if they exchange the notes. So they're not going to sell it unless it's like $8, $9, $10 at a minimum. So everyone that's talking about the exchange, they're not going to do that. And even if they do, it'll be like 30 million shares, but you're going to knock off $500 million in debt. 464 million. So again, it's not the worst thing. And again, if he keeps getting that lower rate, because AMC's credit continues to rise. Its outlook continues to go up, and that's what we needed to get. And that's what's hilarious about AMC's price here. You see all the other fucking movie companies' stock going up, all-time highs. But AMC, well, it's their debt, and then they refinance debt. It does nothing. Okay? Well, they're not profitable. AMC's profitable this quarter. They're going to be profitable next quarter. Well, what is it? Well, they're not going to make enough to pay off debt and do this as well. Okay, actually, it shows that if they're profitable, they'll be more profitable in 2025, which means they'll be able to service debt and pay it fucking down. 2026 is going to be the biggest. I'm going to say it right now. 2026 is a guaranteed biggest box office in history. And they need it to be. Production studios need it to be, and with those top 20 movies that I showed you, it's breaking 12 billion. No questions asked. We could break 13. 2026 is going to be the most profitable year of AMC's history as a company. It is going to destroy it. 100 million plus in profits. I'm looking at this. If they do it right, and if they keep it, it'll be like per quarter. You're going to be fucking loving it. 2026 is, and that's what I'm saying. If we didn't have that writer's strike, AMC would have had about 4 straight profitable quarters. 5 straight profitable quarters. All of these movies would have been moved up. 2026 movies would have been in 2025. They would have been at the writer's table months ago. Months and months before they did all this and created, they would have come up with the same movies. Let's be honest. All they did are remakes. Like I said, 2026 is like, it's all these movies that destroyed it at the box office. You got Toy Story 5. You got 2 fucking Star Wars movies. The Mandalorian one. You have a Shrek 5, dude. Shrek 5 is going to destroy it. You got a Batman. You have Super Mario Brothers. You have another Mona movie coming out, a live action one. I mean, look at all this. Toy Story. I don't want to keep saying them all and keep going down. You have a new Lord of the Rings. You have another Lord of the Rings, like an actual Lord of the Rings, The Hunt for Gollum. This should be insane. Another, like I said, this doesn't even show you. There's so many more movies. It's retarded. Hold on. You have an Avengers movie. You have Batman coming out. That was Masters of the Universe. I probably should know this, but for some reason I don't. Masters of the Universe. I don't know what this is. Got Barney in it? There's no way. I don't know what this is. But you have, let's see here. Project Hail Mary. This is Steven Spielberg. So this is going to be the next Steven Spielberg movie. You have, like I said, the next Lord of the Rings. Toy Story. Another Fast and Furious movie. Crazy. A live action Mona. Another Star Wars movie. Shrek 5. Another Star Wars movie. Another Airbender movie. The next James Bond movie. The next Super Mario movie. You have the next Hunger Game movie. Teenage Mutant Ninja Turtle movie. Hoppers. This Hopper movies is the next Pixar movie. So this movie will kill it too. And it just goes on and on. Oh, there's Constantine 2. Constantine 2 just got announced the other day. A Paw Patrol movie. Street Fighter movie. I feel like I'm missing way more. But still, all those, it's not even the end of 2024. The amount more movies that are going to keep coming out in this one. Like I said, this year is going to two Star Wars movies, an Avenger movie, and Batman alone. And think about this. Avengers, Batman, 2 Star Wars movies, the next Mario Brothers movie, Lord of the Rings, the next Toy Story movie, the next Mona movie, the next Shrek. Like, good grief. It is good. The next Bond. Like I said, is like this 2026 will be ridiculous. Ridiculous. As we're talking, gold is now back over 2,600, 2,602. So again, rate cuts. Gold's telling me a different story. Gold is telling me a different story. So, on top of that, demand for treasuries, all that other and back end stuff's telling me different stories. But there is definitely a play to be made here, I believe, on the SPY. Not financial advice, but the last couple times we've called watch. Now I'm going to be wrong, because the last couple times I've called the SPY play, we've been right on it. We've hit the last 5 SPY plays we've called. But there's definitely, and it depends if he drops rates. If he doesn't drop rates, I don't see a SPY hard drop. I know a lot of people be like, oh my God, it's going to drop hard. I don't think it will. I really don't. People price it in, you'll see some crap go down for maybe a day or two, and then it'll go right back up. But if he drops rates, I think you're going to see it go up for a couple days. And then the week after, maybe 2 weeks after, you're going to see it just fucking smack. Just smack. But again, play that both ways if it does happen. Play it both ways. Don't just stop on the put. Hit it on the way back up. Look inside the SPY. Look at the best performing stocks during that SPY. Know they're going to crash. Get them on the way down too if you want to go long on those. There's tons and tons of ways to make money inside of that. Let me see. What were we talking about? We own a movie theater. Why are you getting mad? There's somebody trolling us right now. Well, yeah, that's the thing. Jamal, they're literally... If AMC's price reflected what it should, if AMC was at $14, $15, it would raise enough capital instantly and would pay down another $500 million, another $1 billion in debt type situation. And what would they be able to say anymore? You would have the same amount of debt as Cinemark. You would suddenly have the same amount of debt as all these other theater companies that are thriving, and you'd have more in the bank than them. and you would be the #1 theater company. What would they say then? On top of that, you already would refinance your debt at a lower rate. Your credit would skyrocket, and then you could refinance it, the newer debt, at a smaller. Like I said, it's like, dude, there's no way out for these guys at this point. They need like an entire shutdown of the United States again. Like they absolutely need one. But at that point, you're going to kill retail off, and you would have mass riots, and we would overthrow them, and they would fucking. So there's like these guys. As hard as you guys think this play is to just chill out and watch your company become profitable, they're getting more gray hairs than you are. I can tell you that much. Have you seen Doug Sifu? Have you seen these guys? Have you seen how much Ken Griffin's aged in the last 2 to 3 years? I know I haven't aged like that. Good grief. Dude looks like he's a dying skeleton. Have you seen Mark Cahodes? Have you seen Mark Cahodes in the last 3 years? Good grief, what happened to that guy? Like I said, as much as you guys think you're mad, it's nothing like these guys. They know what's fucking coming. We know what's coming. But I want you guys to see this because, like I said, the U.S. debt is so massive. Interests alone are $3 billion a day. Like I said, other people see this. Other people see the situation. If you lower rates for the wrong reasons and you're going to long-term hurt the economy, that's going to be priced in to offset the lower rates. History's done it 4.5 times. So, last thing I really want to go over, because like I said, people are now starting to figure this out, and I talked about this for a while now. You know, on March 15th, 2020, they reduced everyone's bank reserve requirements to 0%. Okay? Baby Biggums is great, man. He's doing real good. He's growing quick. He's eating faster. He's responding, man. He smiles now. I love it. He smiles now all the time. I love that little guy. So they reduced the rate to 0. And so all these banks are over leveraged because they didn't have to have any of their deposits. They could go ahead and gamble every single penny they made. Every penny they made. So then the endgame rules were supposed to come in here and fix it. Okay? And I want you guys to listen to this crap, because this is the problem. You know, in this talk, you know, this is why I like Wall Street on Parade. I love Wall Street on Parade. It's one of the only sites that I actually am like, all right, when I read it, I'm like, I always fact check, you know, I'll read a couple other things too and try and get a couple credible sources on things. But like with Wall Street on Parade talks about stuff, first of all, they always link everything. Like you can click on any of this and they will literally bring you articles and articles and articles about it. This is one of the best websites out there when it talks about corruption in the market. And like I said, I have no sponsorships, whatever. People want to know where to go for corruption information. This is one of the best sites. Now, back to this. So again, back to that rate thing. So all of those guys ended up, you know, gambling every single fucking penny they had. And now they're all over leveraged. So then all of a sudden, you had, you know, these bank reforms come out, like I told you guys. And all of a sudden, first thing I said is they're going to fuck this FDIC up, the head of it, because he stopped it. And that's exactly what they did. They gave him his sex scandal and he had to retire. Well, the second that happened, it's just funny because it's like you come down here and you read some of this stuff. And just listen to this part, because this part alone starts to, you're like, Jesus Christ. This talks about, you know, I'm not going to get into this crap, but this talks about Jamie Dimon. And I always talk about how big of a piece of shit Jamie Dimon is. The world's biggest criminal. JP Morgan Chase is the biggest criminal enterprise in the world. Not just the United States, the world. JP Morgan Chase makes BlackRock look like child's play. BlackRock is the biggest scam in the entire United States. JP Morgan Chase is the biggest criminal enterprise in the United States. And it's not even close. But one of the things I want to read here real quick, and then we'll get down to the bottom and stuff I want to show you here, but Jamie Dimon, in the last year, just the last year, has gotten 5 felony counts at his bank. 5 felony counts. One of those felony counts, well, he settled with them, and that's what this talks about, was for his involvement with Jeffrey Epstein in funding his island. Instead of being closed down and everyone thrown in handcuffs, which is what should have happened, they settled. And if it's a $240 million joke, so they settled because rich white bankers don't go to jail when they do Epstein, when they're Epstein's literally business partner. They just pay people off. Well, Jamie Dimon had 5 felonies. He got to settle on all 5. You know what his punishment was? Let's read this. Jamie Dimon and the board of the directors gave him a $50 million bonus after he settled his bank's 4th and 5th criminal counts. So he ended up, for his bank having 5 felony counts, his punishment was saving the bank money and him getting $50 million in bonuses. That was his punishment. He didn't go to prison. He didn't get barred. He didn't get fired. He ended up getting $50 million in bonuses because he was able to settle out of court on all 5 felony counts that his bank committed. Fucking joke. Now, here's what I wanted to get into, because I went over this a little bit last time. So, one of these things that this talked about, after they kicked out the fucking head of the FCC, once they have pretty much corrupted the shit out of the OCC, the Office of the Comptroller, they went over and they bullied him around. They went up, sued him all day, cried and had meetings with him until, pretty much he basically caved in. And it's funny because I want you to see all this stuff on how corrupt this is, talk about the judges. We'll get into all that in a second here, but one of the things is the OCC re-proposed, this rule. And one of the things is people with banks that, have $100 billion or more in assets with this JP Morgan, all the top criminals, they no longer have the rules apply to them. That was what the re-proposal is. So in other words, any bank that has under $100 billion in assets will now need to have higher reserve requirements when they're already struggling, which means banks will go down, but not the top ones. So it's going to eat out their competition. And that is how they're going to try to save the banks in the back end. Is the only way they can do it now is if you look at the United States amount of banks to capital reserve. The amount of banks per capital reserve in the entire country, the United States has more banks than any other country, and it's not even fucking close. And they all pay like shit. They're all Ponzi schemes. So what they're looking at is, all right, let's lower that number, see what we can do, get more concentration in the big ones, and that's how they're going to try to get past all this new requirement. They'll just try and force new capital into these new banks. Now, if you come down here and talks about 2023, because like this talks about, the mega banks are a cartel. They're your new mafia. They're your new cartel. The problem is this cartel controls politicians. They did it through the use of Jeffrey Epstein's island. The one time I'm going to talk about P. Diddy. Why do you think he did it? You don't think he did it to some politicians, gain some leverage, gain some power? Of course he fucking did. And that's the problem. Why is it so hard for a politician to not be a fucking piece of shit? Not cheat on their wife, not take why is it so hard for you to not fucking be a piece of shit? Well, let me never put the people who voted me in there first. Let me do all this stuff that will corrupt me in the back end. Let me take bribes from known criminals. Let me fucking do this stuff that they can blackmail me on. And if they can't figure that out, they do what they do to the head of the FDIC. They get fake fucking sexual harassment claims against you. And then they just get you removed. They're literally banking cartel. So, once they got this fucking proposal And once this was supposed to happen, the rules are supposed to start on July 1st, 2025. The banking cartel is angry, and guess what? They push back. They sue everybody. Okay? Could you imagine? Let me just put it this way. Could you imagine if the government decided to create a law? They created a law. And we said, you know what? I'm going to sue the government. Because that's what they're doing. The regulators, the people who police you, basically your government, comes up and says, I'm going to put this law into place. And they fucking sue them. The government backs down. In other words, aka, the regulators back down. Because of what? They shouldn't be allowed to sue the people that create the fucking rules because they don't want to play by them. If you don't want to play by them, just like in every other country, go take your ball to someone else's court. Go play somewhere else. We don't give a fuck. That's what we have to do. We don't just get to fucking cry baby like this. Well, these same fucking banks are the same banks that are over leveraged to fuck. They're now telling the people, so the worst people in the world, because clearly they showed everyone they don't know how to handle money. They obviously don't know what they're doing. The people that were over leveraged, the people that caused the financial crisis. If you read this too, I'm going to show you guys this because I do want you guys to read this article. This looks at the Fed bailout in 2008, and this is actually an insanely detailed article. It's an insanely detailed report. My baby's doing great. Thank you for asking. He's doing really good. This is an insanely detailed report about the Federal Reserve, AIG. If you guys look, Citadel's involved. All of these pieces of shit. This talks about the entire money trail, who got paid off, talks about senators, talks about Congress. This talks about everything. This talks about their method, but really what they said would happen, and instead of what the bailouts actually caused, how much it created an inflation. It breaks down everything. This is an insanely, if you ever want anybody to learn about the 2008 crisis, maybe you have a family member who was affected, they don't understand what happened still, have them read this. There won't be a single thing left that they don't understand about the bailout and who got it and why they got it and how they fucking got that over leveraged and accounting tactics. This is what we went over last time. This is one of the things I showed you about with fucking Lehman Brothers, with Nvidia, their accounting tactics to make it look like they're gaining more money. Now, what was it called? Oh, this is where we showed you guys about Repo 105. Repo 105 was a loophole, a transaction loophole that they were able to take assets, park them in other areas, which changed categories, which means they no longer had to report the asset, that instead of it being a liability, because they were backing it now and putting that into government bonds, that liability now showed up as an asset in government bonds because government securities are always backed. So it was a loophole that actually was used in Lehman Brothers, and it was one of a huge contributor also to the 2007 and 2008 crisis, but you never hear about it. You never hear them talk about this. It wasn't just, this is other factors that led to that. And this is a good thing if you guys want to learn more about Repo 105. Here's a good article as well from Investopedia. So, these banks, now if you come over here, like I said, these banks, they got rid of, rid of these people that wanted to get it out here. The same banks that clearly fucking were the problems, the people that got a $29 trillion bailout. Now, one of the things I wanted to show you guys down here, where was it? Hold on, there's right here with stupid Warren. So here's what I wanted to do. So they talked about about Warren, despite all you said last year when banks failed about supporting blah 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 recommendation to strengthen the rule for big banks. So last year, all Warren ever did is we need to strengthen the rule. We need to strengthen the rule. It's time to strengthen the rule. It's time to vote. She votes against strengthening the rule. And then they say to her, well, why did you, for the last year and a half, say that you want to do this rule and now you vote against it? But one of the things that also they said was, you also said it's very plausible that we just withdraw the rule completely. So these capital requirements still might be pulled completely. And then she says, well, yeah, but it's getting tougher for Americans and big banks are unhappy. And they've gotten weak in the knees, so we need to change our plans. Like I said, they don't know what they're doing. They have no fucking clue what they're doing. You have morons and people that belong in retirement homes and deserve a pudding cup making financial decisions that they don't understand and are put in office. It's mind-blowing. If they take this fucking rule completely off the table, well, they've already gutted it. It really doesn't matter because now if the rule just goes into place, it just kills medium to small banks. But like I said, it just can. This is just crazy because, like I said, this talks about how they bully, intimidate. Michael Barr. They talk about all these fucking people. Talks about hold on, where's the judge? Judges are taking trips. Judges are going to lavishing places, getting bribe money after they make a decision on cases. Hold on, where is it? Here, let me write. Here we go. Let me write this. Talking about making. Here you go. Here you go. Here you go. Here you go. So what they're doing is they're giving Scala is the son of late Supreme Court Justice who didn't see anything wrong with accepting free vacations from private investors while he sat on the high court. Talks about how they have all these judges and they're just giving them fucking free vacations. They're giving them bribes, giving them to their family members, all sorts of things. Scala took dozens of trips funded by private hedge funds. I can't click because I'm not going to do a fucking... I'm not going to do a... Don't click on this. I'm not going to do a freaking paywall. Get this paywall out of my face, dude. That's crazy. But again, I don't see a rate cut coming. I do see if they do cut rates, you will see a SPY drop because they're cut for the wrong reasons. There's a super very good potential play there for you guys. I told you guys I'd give you some plays every once in a while, some things I'm going to try. If I hear rate cuts tomorrow, I will be buying SPY puts. I will be. I'm going to put them a couple weeks out, but I will be buying SPY puts. There you go. People ask me some plays, I'll give you one. I got a couple other plays that I'm going to be looking at. Again, another thing you can look at is SCMI. They're not reporting their 10K for a reason. Eventually, it'll start to affect the stock. Eventually, people will say, what the fuck is going on? They'll see the investigation. There's a potential play over here as well. There's a couple plays that I'm looking at. Again, I'm watching Nvidia. I'm watching Ken Griffin. When Ken Griffin sells his stake, that puts red flags in my eyes. When the CEO is dumping 240 shares in blocks every fucking 2 days. When 3 of their top 3, companies are being investigated along with the company itself. There's plays you guys can make. Like I said, I believe the price of gold will keep steadily rising. There are companies, God, I want to say one, but I don't want to be a guy that's like, oh my God, you're a pumper. There is a stock out there that literally runs off the price of gold. Just look for those. You know what I mean? You can look for those. They're going to have little steady rises because gold will keep going up. It's just like, God, what the fuck's that stock? There's a stock, I'm blanking on it. Was it me? It was like, what the fuck was it? There was a stock. I gotta look back. I'm gonna look back. I'll let you guys know in my next video. There's a stock that always runs off Bitcoin's price. And when Bitcoin I played it for like 3 months last year. What the fuck was it? I can't remember the stupid name for some reason. Whenever Bitcoin drops, this stock plummets. And whenever Bitcoin jumps back up, it fucking flies back up. I will get you that name. I'll get you that name, I promise. I will put you that name so people can start to watch it, because it's a play that I shouldn't abandon, because I did make continuously good money on that because it was easily predictable. Because that's what I'm saying. Event trading, guys. That is another example of event trading, which we will get into in this. That's one of those strategies I was telling you about. Watch the price of Bitcoin. Watch the price of gold. Watch the price of commodities. Watch the stocks that are attached to those prices and those commodities. Watch when a disaster happens. Watch when something gets hit somewhere, because you know prices will skyrocket. When you see outbreaks, look at something as stupid as toilet paper. Fucking sky, you can always see what's affected by, there's tons and tons of ways to make money that are not as big of chance, because you can see what it will affect event-wise, globally, price-wise, gas. You can see certain events with oil. Event plays are a very profitable thing if you want to take the time to every day. Not just, watch the news, watch this, look for a disaster. Don't look for a disaster when the news tells you. Look for the disaster when it's coming up. Look for a giant hurricane. Hey, there's a hurricane coming up in 3 days over here. What's their major import? What is this? What can go up? That's the type of stuff you can do. That is more research-based investing strategy. But I will get into that as well. Like I said, I have six little strategies like that type of strategy that you guys can start to look at implementing in your own trading strategies as well. We're going to get into options, ETFs. There's a whole bunch of things I'm going to show you guys to where you're not just sitting there. Like I said, I'm going to show you I don't ever, post other YouTubers' videos, but again, Tony Denaro, there is a play you can do with like I said, with your covered calls. You can get cash secured puts. You can do the wheel route. You can collect premium. He has a video on it. If you do wheel strategy, Tony Denaro, he'll pull it up. If you have a ton of shares in AMC, check it out. Maybe it's something that interests you, and in the meantime, it's something that makes it to where you can keep collecting premium, buying more shares, lowering your average, but not needing to take the money out of your pocket to do it. And that's huge. And that's something I wish in the beginning of this movement, Trey and Matt, instead of them having you guys watch them, and like I said, this is what I should have done earlier. Instead of having you guys just watch charts so they could fucking collect chats all fucking day, they should have been teaching you how to watch them yourselves. They should have been teaching you guys strategies, but they didn't know strategies because they were having more fun watching a chart and just saying it's got to go up every day. And everybody was like, yep, yes it does. So again, I'm hoping these videos, you guys in the next couple of days or weeks or whatever start making enough to where it doesn't have to. And that's the thing, don't have a goal. Like, no matter what, never go like, God, I need to make 2,000. I got to make, because you're going to get close, or you're going to walk away from profits because they're not profitable enough. Green is never bad. Green is never bad. You never need to get greedy. Even if you're winning $180 at a time and you continuously do that throughout the week, you can make decent money doing it that way. You don't need to hit hundreds, thousands % on every single play. But we will get into some things here. But like I said, guys, does anyone have any questions at all before I head out here? But again, I'm going to get that Bitcoin trade for you guys too, because again, it's a stock you can watch. But I'm not pumping it. I don't currently have any stake. It's just something that I was successful in, and it's an event type of stock that you can watch, that Like I said, that's the one thing I like about AMC. I can sit there and I can literally plan out what I can kind of tell what they're going to make. I don't have to sit there every time and wait for their earnings report I can have a pretty good estimate on what their earnings report's going to be because I can look at the domestic box office and have an idea and just know what it's going to be around. Like I said, we're going to be at about 2.7. I think we'll end the quarter at about 2.175 billion. Puts us at like, I'd say we're at about 28 million profit. And a lot of people are like, what the hell? Why? I put us at about 28 million profit. Maybe a little higher. It depends on how merchandise did, because merchandise sales this quarter should be massive. But like I said, guys, I don't want to just keep telling everyone we're going to make hundreds of millions every quarter and blow all this stuff up. I'm trying to be as honest with I can so you guys can make your decisions on. But like I said, AMC will no longer be burning millions, hundreds of millions. Those days are long gone. Those days are long fucking gone. What's the name of the research website you mentioned again? Are you talking about Wall Street on Parade? Oh yeah, I did miss two things here, but I do want to show you guys something. So rate cuts. If they do rate cuts, it will cause more inflation for you guys. And I want you guys to understand something. Look at this. This is how bad it currently is. If you guys look at Social Security, if you guys look at the prediction, this is from their own website. This is from the government website. Look at this. This is actually insane. In the year 2035, Social Security will be at zero. It will run through its entire reserve and it will be at $0. You're going to keep paying into it until it runs out. Congrats. Now, if you're getting anything, if you're going to retire after 2035, I don't know what's out there for you. Good luck. We'll figure it out later, I guess. But if you look at the reserves, look at how high it went up. You know, you got a massive amount. You know, the government put money in there as well. But look at how fast it's draining. In the next 5 years to 6 years to 10 years, it will be draining at a faster rate than when the government printed money to put it in. Look at how fucking sharp this decline is in the next 5 years. I'm sorry, the next 10 years. Well, no, that's just I'm sorry. I was getting confused. I got fucked up for a second because it says 33 on the chart, but obviously it stops at 35. So, if you guys look, the new middle class retirement plan is work till you're 75. The retirement age keeps raising. It keeps raising. Listen to this. New study finds half of middle class workers plan to keep working past 65 now. Hold on, that wasn't the end of it. Meanwhile, listen to this number. Meanwhile, half of already retired workers are going back to work because they need money. That's how fucked up this economy is, which shows you the economy is so screwed up. So when you cut rates to try to stop recessionary periods, again, throughout history, that's caused a spy drop. It's caused a crash in the market. So, again, guys, just be aware. Definitely could make a good play there. BITO, Bigums, that's your Bitcoin. No, it's not BITO. It was I can't believe I'm blanking on this name because I used to talk about this stock to my friends all the time. And now I can't remember the name and it's so stupid. I'm just so tired, man. Too much stuff going on. Can't even think. I'm just blanking right now. I'm so tired of little man. I love him, but my gosh, I forgot how fun it was waking up every 3 hours to feed him. And that's if you're lucky. That's if he doesn't wake up before that. Oh man, it's fun though. Oh, I almost forgot the last thing. Here's the problem, everybody, and this is what I want you all to see because this is a big deal. While they're destroying the dollar, while gold is raising, I told you what they're going to do is they're going to end up just destroying the dollar. That's their last chance. They're going to destroy the economy, and then get CBDCs, but they'll be wholesale CBDCs so they don't lose their assets. They don't lose their value and they stay rich. Well, look at this. This came out yesterday. 41 institutions joined the tokenized cross-border payment project, Agora. Today, the Institute of International Finance releases the name of 41 firms selected to participate in the public-private test of Project Agora. What is it? It's wholesale CBDCs from 7 central banks. Wholesale CBDCs. 2 years ago, I warned you about wholesale CBDCs. I said if we're not going to let them do CBDCs, they're going to make up wholesale CBDCs. And guess what they did? They made up wholesale CBDCs. Here you go. They made tokenized fucking securities, and then they made 7 banks in charge of issuing CBDCs. Now those banks can issue those CBDCs to back assets, and now here comes the corruption. Now, if you look at the 41 banks that are now participating in this fucking corruption in the CBDCs, guess who it is? JP Morgan Chase, BNP Paribas, which is the second biggest corrupted bank in the world. You got basically all of your fucking trash. Deutsche Bank. Criminals. Just criminals. All the criminals. TD Bank, I already showed you the criminals TD Bank is. Criminals. Just criminals. So all the criminals are involved. Citibank, criminals. BNY, criminals. You know, all the good guys, all the criminals and their friends. And then they got to get stuff to where you got to get a couple French. You got to get a couple Japanese. You got to get a couple Chinese. Why? Because, again, they got to be able to hide the assets in other countries. Classic. So be prepared for cross-border CBDCs, tokenized assets, and that's exactly what I said. They're going to make tokenized fucking assets. They're going to deposit things in tokenized form, and then they're going to issue wholesale CBDCs. They're going to issue wholesale CBDCs as collateral. And what did I just show? And I told you this for 2 years, and here it is. They have tokenized deposits of assets that are backed and created with wholesale CBDCs by 7 central banks. It's pathetic how predictable they are. It's pathetic how predictable they are when you fucking realize how big the scam is that the United States in financial system is. It's ridiculous. Again, Powell will not cut rates tomorrow. They're begging him. Look at this. The Honorable Jerome Powell. Today, we write to urge the Federal Reserve to cut federal fund rate, currently at too high of decades of 5.3%. We need you to cut it by 75 basis points, which would destroy the yen carry trade and cost all these mega banks billions of dollars, but who cares? We'll bail them out. It'll destroy the fucking SPY. Given that the Fed's confidence in inflation moving forward of a 2% target, slower job growth, now is the time to swiftly cut rates. And this is from your fucking all your fucking douchebag senators, congressmen. Oh, please, cut rates. We need you guys to cut rates. It's your fault the economy's fucked. No, actually, it's your fault the economy's fucked. The Fed's job is to bail out the failing banks that you guys all seem to let destroy the economy, and then you just bail them out by trillions of dollars and then wonder why the entire economy and inflation's fucked. On top of that, you're the guys that are running the deficit, and on top of that, it's at $35 trillion and we're paying $1 trillion in interest. It has nothing to do with the Feds at this point. They want to blame them when it's their problem. Please destroy everything so we can look good like we tried right before the elections, or we need to vote all you criminals out. Is MOS possible with CBDCs? Yes, it's still possible. All it's going to do is just let them open up more derivatives. But okay, so now you have an even bigger time bomb. You have an even bigger bomb when it all goes to hell. Nothing's going to save these guys. They can keep running But eventually inflation's going to catch up. Eventually the debt, all this stuff's going to catch up. It's going to be too great. GDP is going to keep lowering. They're collecting less and less taxes. They're going to start to go after the rich because they're the only ones that will have money with taxes. So they'll tax the shit out of them, which will start pissing off the rich, which will start exposing shit. They'll keep arresting people like P. Diddy and finding these fucking people out who have been blackmailing all these other people. Time's running out, and AMC's just going to keep making profits until then, so fuck them. Further thoughts on the CRE crash? Well, here's the thing. That's supposed to start here in a month or two. It's supposed to start in the beginning of next month is when all of these renewals start. Starting in October. The beginning of October. If you look today, hold on. Speaking of, thank you, good question. If you look at, where is it? Hold on, give me 20 seconds. I got tagged in so much shit today here. Hold on, mentions. Hold on, sorry. If you look, the commercial real estate is taking a harder hit than even I was talking about. Today, there was 2 buildings in central Minneapolis, and they sold at a 97% discount. So you're going to start seeing all that hit these guys in their books in the next couple, like I said, the next couple quarters. Which is why they couldn't, like I said, the CRE bomb, I still think is, you're going to have the CRE bomb. If they have to do rate cuts, you're going to have the carry trade bomb once again. There's really no escape. There's no positive road for these guys to take at this point. They've created too many bumps in every single one. There's no smooth sailing for these guys. They're going to have to sit there and keep coming up with new bullshit ways while all we're doing is holding, going to work, and living our lives that we've always lived. So, derivatives broke the system. Yes, they did. We should have learned in 2008 derivatives broke the system. But instead we gave them more leeway to go ahead and 5 times the amount of derivatives that they had. And now there's 56 trillion in derivatives. 56 trillion in derivatives, but who cares? No big deal. There's not even... Does the United States even have 56 trillion in assets at this fucking point? But, like I said, guys, I feel confident as fuck in our play. It might take a little bit for our stock to reflect it, but it will. It will reflect it. AMC is now more than a recovery play. The recovery play with a bomb of shorts in the back, a bomb waiting to explode in derivatives in the back end. Until then, keep seeing movies. Watch the financial system collapse. Watch the Gong Show tomorrow. We'll see what the Fed say. We'll see what Powell does. But again, if you hear rate cuts and you feel like taking a risk and you want to say, all right, well, history says this has been this. Again, SPY might be a good way to go on the downside. But Biggums are going to use some of this crypto technology for their CBDC and XPR ledger will be implemented. I mean, that wouldn't surprise me. They've been talking about XPR for a long time, getting that involved in the CBDC type systems when it becomes wholesale. So it's now become wholesale CBDC. So yes, there's potentially a way for XRP to run if they do implement that system into it. So XRP could be a skeptic play, but we'll see what they end up doing. But yes, XRP could be a skeptic play as well, which would be a skeptic play based off, again, events. So it'd be an event skeptic play. So when you look at plays, every time you make an investment, know what type of play it is. So again, if you're going in XRP, say, all right, well, this is a skeptic play based off an event, and the event is they implement this technology that is already starting to be implemented in the back end. So when you invest, no, have a strategy. Don't just chase a squeeze every time, or don't just chase whatever you think fucking Kitty and these guys are doing every time. Or if you do, when it runs, get the fuck out with it.
Don't be the guy sitting there holding the bag and now you have to pump up some shitty stock you never invested in, thought about, or even wanted anything to do with 3 weeks before you invested in it. You know what I mean? Always have a strategy and know what type of investment you make when you're making it. So, but I'm gonna get going, guys. It's already 11:28. I'm sure my wife wants some time to go to sleep here, but thank you guys for listening. I will be live in a couple more days. Again, we'll go over those strategies, and on top of that, I want to go live this weekend with Peter Hahn. So thank you guys. I'll talk to you guys soon. Have a great day.